Hey, what's going on, traders and investors? Thanks for checking out this video. My name is Travis from Master the Market, and I wanted to make this video to talk about some of the oversold stocks right now. If you've been paying attention to the stock market, you probably know that there has been a little bit more volatility lately in the general market, and we've seen a lot of stocks start to pull back from their highs. Actually, if we take a look at the map today for what the market is doing, you can see that just about every sector of the market is red. We have a lot of big name stocks like Google, Facebook, Amazon, Tesla, Microsoft, Apple, all of them pulling back, having a pretty big red day. So this is going to create a lot of fear in the market, but what Warren Buffett, of course, said is to be fearful when others are greedy and greedy when others are fearful. So this fear in the market and these pullbacks often make really good buying opportunities, and that's what I want to talk about today in this video. Okay, so the first stock that I'm looking at for a potential dip buy here, and this is going to be for a swing trade or even a longer term investment. This is not necessarily going to be for a short term day trade or a scalp, but the first stock is going to be Amazon. Now, Amazon is, of course, a well-known company, a well-known stock, and it is, of course, a stock that typically performs pretty well. However, with the market pulling back, you can see the ETF up here for the S&P 500. This is SPY. It's been pulling back over the past couple of days from its all-time high of $479.98. It's down to today $457.83. However, if we look at the long-term history of SPY, there's really never been a time where buying the dip in SPY has not worked out. So this is probably going to be the same situation in the long run. What we're looking for is to buy these stocks that are pulling back with SPY, so that way once SPY starts to bounce, these stocks are also going to recover and you're going to be able to make some money from them doing just that. Okay, so the reason that I like Amazon for a dip buy in the near future is simply because of the fact that Amazon is very rarely oversold. You can see that the RSI down here on the daily chart is down to about 30, which technically does put it in oversold territory. And every other time that it's been in oversold territory over the past year, we've seen the stock bounce back up pretty significantly. So one thing about the market is history does tend to repeat itself. And with that being said, most likely Amazon is going to recover out of oversold territory in the near future. So if you're looking to take a position in Amazon, depending on how long you'd like to hold it, we can easily see Amazon bounce 10% or more over the next couple of weeks or months back up to 3,400, 3,500. And if you have even more patience and you're getting into this for a longer term investment, odds are Amazon is going to eventually make new all-time highs just because of the strength of the company itself. So for those reasons, I'm really liking Amazon here for a dip buy. Okay, so stock number 2 is going to actually be Peloton, which has the symbol PTON. If we zoom in a little bit on this chart here, we can see that over the past couple of months, Peloton has been forming a really solid falling wedge pattern. Now, although this kind of looks like a bearish pattern because it is going to the downside and Peloton is downtrending, believe it or not, the falling wedge pattern statistically does end up turning into a bullish pattern once the stock is able to break out above this level of resistance. Okay, so as of right now, because it is still downtrending, it does make it a little bit more of a high risk investment because there's nothing that necessarily says this has to break out above this resistance in the near future. It can, of course, continue to downtrend, and it even could break down below this level of support and actually start to sell off even quicker to the downside. But that is, of course, just a risk that comes with any trading or investing, and there is no pattern that works 100% of the time. So even with that in mind, that's why I like Peloton for a swing trade or an investment in the near future, because it is approaching this level of support once again. So I would be looking to buy near this level of support. You can, of course, set a stop loss below that support in case it does start to break down. Or the other way that you can go about this is to simply keep Peloton on a watch list. Like I have over here on the left side of the screen, we have Peloton down here. And what you could do is simply wait for this pattern to kind of form, wait for it to potentially break out above this level of resistance, which currently falls at about $35. But of course, that's going to change day by day. And once it is able to break out above that resistance, that's going to be a confirmation of a breakout of this falling wedge pattern, which is going to be a very bullish sign for Peloton. And odds are we're going to see some buying pressure pick up from that level, and we can easily see Peloton push back up into the 40s in the near future once that happens. So those are the two ways that I would look to take advantage of Peloton. It's going to, of course, depend on your preference, whether you prefer to buy at support or if you want to be a little bit more patient and wait for that breakout confirmation to happen. That's entirely up to you, but regardless, this is a good dip to keep on watch, as I would expect it to recover, especially once the general market itself starts to recover also. Okay, stock number 3 is going to be Target, TGT. Now, the reason that I like Target for a dip buy is because, stocks like Target, Walmart, Costco, even Dollar General, these consumer retail stocks, they tend to perform a lot better in bearish market conditions like we've currently been seeing over the past week or so than a lot of other sectors of the market. So, sectors like technology, sectors like healthcare, financials, all of those are going to usually perform pretty weakly in relation to the general market, whereas stocks, again, like Target, tend to show a lot more strength during these times. So Target is down a little bit from its recent all-time highs. And if we zoom out and take a look at the bigger picture of Target, obviously we can see that Target is a very well-performing stock. It's in a very strong uptrend in the long run. And even though it's not necessarily in oversold condition, its current weekly RSI is down to about 42, and its current daily RSI is down to 39. It is still in a pretty big pullback, and I would definitely expect Target to be back at all-time highs in the near future, making this a pretty solid dip buy during this pullback in the market. Okay, stock number 4 is going to be Microsoft, which is MSFT. Now, Microsoft is in a very similar situation to Amazon as far as why I'm liking it for a dip buy. At the end of the day, Microsoft is Microsoft. It's a really well-known and reputable company. The stock tends to perform very, very well. Actually, if we zoom back out here and look at the long-term chart, we can see that Microsoft is in a very steady and consistent uptrend, consistently making new all-time highs and pretty consistently outperforming the general market. So that is reason enough for me to want to buy the dip in this stock, because once the market itself starts to recover, we know that, of course, Microsoft, being an outperformer, is also going to recover and is most likely going to be back at all-time highs in the very near future. Okay, so if we go ahead and draw a little bit of a level of trendline support here, you can see that there is a little bit more room to the downside here for Microsoft. I would say that the level of trendline support right now is at about $290 per share. Will it continue pulling back to that level of support? Who knows? That's going to depend on the strength of the general market. However, I will say that if you are looking to dip buy a stock, the best way to go about that, in my opinion, is to slowly build into a position. So you don't want to necessarily go all in right now at $308 per share, because of course there is still room to the downside, and we can see this easily down in the low 290s in the next couple of weeks. But at the same time, you don't want to wait for it to get down to 290 before you enter into any of your position, because there is no guarantee that the stock is going to pull back that far. And if you're waiting for that to buy in, there's a good chance that you may miss out on a big move in the stock. So what I would recommend doing if you are looking to open a position in any of these stocks, or really any stock in general for a swing trade or an investment, is to slowly build into that position. So for example, let's just say that your maximum position size here for Microsoft was going to be 100 shares. A good way to go about that is to maybe buy 20 shares now, wait to see how the stock performs over the next couple of days. If it continues to pull back, maybe you could add 20 shares at 300, and then 20 shares at 297, 20 at 295, and then 20 more at maybe 293. This way you're not putting all of that risk on the table right now, and you're able to slowly average down and build your position in the stock. Okay, and with that being said, the last stock that I want to talk about for a dip buy in the near future is going to be Roku, ROKU. Now, Roku is a little bit of a confusing stock here because it is a well-known and reputable company. However, if we take a look at the past year, we can see that Roku has had a big sell-off from its all-time high of $490.76 all the way down to its current price of about $177. Now, technically, this would be described as trying to catch a falling knife because this is in a pretty strong downtrend. But personally, I kind of like Roku today, especially because if we look at how it's performed today in relation to the general market, we can see that SPY had a gap down and then it sold off today, making new lows, whereas Roku had a small gap down and then kind of actually started to climb back up, even though the general market was going lower throughout most of the morning today. To me, that is a good sign of relative strength. It is performing a little bit better than the general market today after it had this pretty big sell-off to the downside. And on top of that, if we zoom out a little bit further, we could see that in the past, $170 or $165, right around in that area was a level of resistance. Let me go ahead and draw this on the chart. It was resistance right about here, another time here, and then it acted as resistance right here before this breakout happened, and Roku had this big run to the upside. And if you know a thing or two about technical analysis and support and resistance, levels of support in the past often become new levels of resistance, and the same is true for past levels of resistance, often becoming new levels of support. So, because this was a past level of resistance, now Roku is pulling back to that past resistance. There's a good chance that that may now become a level of support. And if you pair that with the fact that it is very oversold on both the daily and the weekly chart, I think that at these levels it is kind of a steal, and it's a good price to get into this for a swing trade or even a longer term investment. I would easily expect this to be back over $200 per share in the next couple of weeks or in the next couple of months. So there is easily room to make 10 or 20% on your investment by getting into Roku on this dip. Okay, so those are 5 stocks that I'm looking at for a dip buy here while the market is pulling back. All of these are relatively safe longer-term investments because they are well-known and reputable companies. So hopefully you enjoyed this video and found some value within it. If you did, please make sure to give the video a like and subscribe to the channel so you don't miss out on future videos and future trading and investing lessons. And as always, if you want to learn more about day trading, swing trading, and long-term investing, all of that can be found on my website, Master the Market, which will be the first link down below in the description. But anyway, thank you again for watching. I hope you enjoyed. And until next time, good luck with your trading.